All right, guys, welcome back to my YouTube channel. This is BUFX, USHF legend, aka God and Chat. Now, today we'll be talking about what do people need to know before they start trading forex. This question is an important question because many people just dive into forex without knowing the primary thing they need to know. They need to know before they come to what forex market, and that is why many people don't succeed in this market, and that is why many people lose their money. Today, I'll be explaining what people need to know before they start trading Forex because Forex is a very complex market, and then you need a primary knowledge before just dive into what before you dive into Forex market. One thing to know is Forex is a business. And when I say Forex is a business, it means that if you are running a business, you don't expect that it is immediate moment you start your business, you are going to be seeing profit or you're going to be you are going to be successful. You need to put some effort, some different things together before you can see success in anything you start. So and that's how Forex is exactly. Now, the reason why I say it's not a no, the reason why I say Forex is a business is that Forex is not a get rich quick scheme. Is a market that takes a while before someone can really understand it. It's a very complex market. The minimum time someone can use to learn Forex is nothing less than 1 year. But if you are the type that doesn't have time, then you need to put more than 1 year, at least 2 years like that. Before I got to understand Forex market fully, before I got to know my edge, before I got to know my strategy, before I got to know many things in Forex, it took me about 2.5 years before I understand fully. During that moment, I thought Forex is something that will make me grow very fast, that will make me rich very fast. But it was an irony. Like I didn't, it's not what I thought that is going to be. It's actually happening to me at that moment. So Forex is something that you have to know. You have to be patient enough. It takes time. It's not something. So if you are coming to Forex, don't come with the intention of want to make money instantly. Come with the intention of want to know you want to be in business that takes a while before you can be successful in it, and then you are ready to put in 100% 100% effort and work to it. Now, another thing you have to consider is what before you begin Forex, you have to have a stable income. Now, the reason why I say you have to have a stable income is that as a forex trader, if you are just starting, you have to have a stable income because it is something that will be you are going to be surviving it the moment you are, and those moments you are at what you are putting your effort, you are training, you're practicing. So if you have a stable work or if you have a stable job that is bringing you money to the table, by then you'll be so desperate to be running after what is not, and then you'll be more, you have more patience to learn the necessary things you have to learn in market. So uh before you begin anything called Forex, make sure you have a stable income or you have a source of income that will be bringing something to the table for you to survive on. So if you know you are not having a source of income, it's advisable not to begin Forex because the moment you begin Forex without having a stable source of income, that is when you are going to be having that kind of mentality of getting rich quick in forex market. So by then you'll be mismanaging the risk, you'll be doing all sort of things that you are not supposed to do. Because all what will be on your mind is that you just want to make money, you just want to make money. And forex is not like that. If you're having the intention of you just want to make money, you won't make that money because all what you'll be thinking is just money. You won't focus on what is necessary to learn in the market. So that's the number two things you have to know. You have to have a stable income before you begin forex. Now, the number three things is your trading psychology. Your trading psychology is very, very important. What do I mean by trading psychology? Psychology deals with your emotions, your all those things that are abstract that you can't see, that you can just feel. That's what they call psychology in trading. Something like your emotions, your greediness, and like that. So that's your psychology. Now, ability to control your emotion is very cogent what in the forex market because of what if you are the type that is so emotional when it comes to when you see your money when you are losing, or when you are losing, or when you are the wrong side of the market, or when you do something that is not so you are not supposed to do in market, and it's causing you a lot of losses and something like that. If you are not so emotionally stable, you won't be able to handle all those moments because you'll be so desperate that you won't be able to know what is next for you to do in the market. So your emotions should be in control. I suffer a lot during my days when I was still learning. It took me a while before I can know, before I was able to control myself, because the number one thing most people do wrong is that when you are trading, especially when you are on a running trade, it's not advisable to be checking your trade. If you're a swing trader, remember, if you're a swing trader, your entry time frame is always 4 hours. No, as a swing trader, it's not advisable to be checking your trade all the time. If you're checking your trade all the time, you'll be having all these emotional issues, because whenever you see a market pullback or something like that, you'll be so eager to to tamper with the market, and it is advisable to let the market do what it likes. You are not the market maker. Market will always do whatever it wants to do. That is why you have to manage your risk properly. Remember, in my last video, always manage your risk properly, and then your percentage risk should be 1% all the time. 1% all the time, and don't violate your trade plan. So again, under psychology, we have greediness. Greediness. So I know you know the meaning of greediness. So it's just what, when you are being greedy, little profit is not enough for you. Want to get rich quick within a short period of time. All this kind of thing. When you see a little profit, you are not satisfied with it. That's why most people That's why most people are not successful in market, because whatever market give you is a profit. As long as it's a profit, is the money. Accept it and be happy with it. There are some days market will give you a bigger profit. So there are some days market will give you a smaller profit. So all those days market give you a smaller profit, embrace it, be happy with it, leave the market and do another thing. When the market gives you a big profit, embrace it. Don't let that what embracement and flow into your blood, because if you are too happy, sometimes you might fail in the market, because of what, you will be so eager to enter a trade without even seeing a proper direction of the markets, because of what, you win. So you'll be so eager that you'll be like, okay, you are the boss now, you are the master, so nothing is happening in the market now, you are the market maker. So whenever you win, let the memory of the winning end the day you win it. When you are coming to the market the next time, make sure you are coming to the market with a reserved psychology, so that you are going to keep winning. And remember, we are not in forex market. Every day is not your winning day. You win sometimes, you lose sometimes. That's why there's what they call risk to reward. I explained in my last video. Risk to reward is very, very important. So when imagine if your winning rate is 50% and your risk to reward is always 3 to 1. So you always win, because of what, even if you lose, if you are going to be winning 3% and you are going to be losing 1% whenever you pick a trade. If you are on a scale of 1 to 10 trades, if you lose 5 times and you win 5 times, if you lose 5 times, that is 5% gone in your account. If you win 5 times, that is what, 15% profit to your account. So that's how risk to reward works. It's not about your risk, it is about your risk to reward. So manage your risk well, and then make sure that you stick to you stick to risk to reward. That's the most important thing you have to do. I talked about this my last video when I was talking about trade plan. So I will still talk about it today again. Trade plan is just a blueprint of your trader, the rules and regulations that guide your trading activities. So what do we have in trade plan? What we have in trade plan is just your risk management, your strategy, your entry criteria, your exit criteria, and the numbers of trade you pick a week, the numbers of trade you keep per month. So all those are the things that comprise of what, your trade plan. And then make sure that when you are trading, make sure that you follow all this trade plan religiously. You execute your trade with your trade plan. So that's how you are going to be a better trader, when you execute your trade plan the way you are supposed to do it. So, and the last thing I'll be talking about is what type of trader are you? We have different type of trader in market. We have the scalper, we have the day trader, we have the swing trader. So the scalpers are those ones that just trade within a few minutes, with a range of 1 minute to like 5 minutes. Day trader are those that trade within a day. So their own time frame is within minutes to an hour, 3 hours, like that. So but it's just within a day. They don't leave their trade overnight. So but swing trader are those ones that stay longer in market. They leave their trade overnight and like that. So those are the differences between scalpers, day traders, and a swing trader. So me personally, I am a swing trader. So I stay on trade for a longer period of time. So that is a difference between the three type of trader. So you have to define what kind of trader you want to be. So before you define what kind of trader you want to be, you have to look at your personality, look at your time, look at what you do, your activities like that. So those are the things you need to know. You need to evaluate first before you choose what kind of trader you want to be. If you are the busy type, you can't be. If you are the busy type, you can't be a day trader. You can't be a scalper. The only thing that is the only option you have is just what it's just a swing trading, because swing trading takes gives a chance of what you being you being able to do other things. But day trading, you have to be on your laptop in this particular period of time, studying the charts probably within it every day. But swing trader, you might sometimes I don't enter trade within 2 days, 3 days like that until I see a setup. So and that's how it is. So if you are coming to the forex market, these are the things you have to know before you are coming to the what to the trading floor. So quick recap: number one thing you have to know is forex is a business. Number two, you have to have a stable income, your trading psychology, and then number four is your what? Your trading plan. And number five is your the kind of trader you want to be. If you have any question, comment below. If you have any observation, comment below as well. I'll respond to you. So make sure you click the like button, share, and click the subscribe button too alongside. And then make sure you click the bell notification button so that by the time I drop another video, you'll be one of the first person that will be seeing the video. Thank you. God bless.